Boom! Good morning, everybody. Happy Thursday. Welcome to Pre-Market Prep. Spencer, Joel, Dennis here with you for the next hour or so. We got a lot to get to. We are going to talk about yesterday's rally. Holy cow! Not everything, almost everything went up yesterday. We'll talk about what that means for today. We do have some macro things to discuss. Jerome Powell is speaking again today. We've got jobs number tomorrow, non-farm pay jobless claims today. We got a lot of earnings, a lot of software and retail earnings to discuss. And then Marc Chaikin and Peter Tuchman are today's guests, as they are every Thursday. So smash that like button. Let's go to work.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
All right, Joel, good morning. How was your evening/morning going? Okay, it's quiet out there.
Yeah, fairly tight range here, and jobs number tomorrow,
Yep.
right? So who knows? Maybe a quiet day. What's a quiet day look like? I don't know. Less than like 120 handles. Stopping the levels this morning. I'm just gonna give you the net change, and that's just down a couple ticks at 43.8150, and I was just looking at to see where the market closed, right? The actual invasion started February 24th, right? And we had a
Thursday.
that was part of our long weekend, right? Correct?
No.
Yeah. Or that was a Thursday.
No. It was Thursday. It was last Thursday.
Right.
Yeah.
And then so the following day the market closed at 43.80. I mean, we all know what's happened between now and then. And here we are, right back to 43.80. So right now, market's neutral on this. We could talk about the resistance in the market in a little bit. Crude ripping again. I mean, taking over a port in Ukraine. That's not good for oil, or not good for us. I guess good if you're long oil. Up 337, 113.97. Gold up about 11 and a half bucks, 1933.70. Silver, that's going the same way. We have silver in the green by 36 cents at 25.55. Bitcoin just hanging out here. What a quiet couple days, down 285 at 43.640. Ethereum futures, they're in the red, just slightly in the red, 39.50, 29.18. Both pausing at resistance. Well, let's bring in Triple D here.
I'm here. What's up?
Oh boy, I don't know. I mean, Mr. Market's saying one thing. I guess the world is saying another thing. That's resiliency again. That's the only thing I can say about this market. Whether or not it's going to hold, I don't know. But man, what about that rally yesterday, Triple D?
I did
What
not
a rally.
see Powell, and I mean this was 100% Powell. It was we were up a little bit, and he come out and he set a quarter. I did not think he was going to, and obviously he's not the final say, but he says I would vote a quarter, and the market just never stopped ripping. It's what the market wanted. We've been talking about 50 basis points being a highly unlikely probability, but he could pretty much killed it yesterday. But when he said that he'd be voting a quarter, and obviously this market just ripped on the Powell speech, and it continued, and it was infrastructure rally. Props to Mitch, who was calling out the infrastructure. The opposite to me, I did not see stocks like Deere going up $20 yesterday. Dead wrong on that one. But, I mean, there was so many stocks. Nucor, new all-time highs. I mean, just infrastructure and value stocks. That's really what they were jumping into. It was value. It was infrastructure. And it was pretty much everything. Kathy not participating, really. A lot of the beaten down growth names that have had a really good run really didn't run. It was a pickup, on the stocks that some of them had lagged a little bit, but I mean, that infrastructure stock's unbelievable. And Warren Buffett, shout out to Warren. New all-time high yesterday. Wow.
Yeah, and whoever was in the chat yesterday that was like, why is Berkshire not, or it may not even been this show, it may have been a different show. Like, why is Berkshire Hathaway not up as much as the other banks? Yeah, and whoever,
What more do
in
you
the
want?
chat, I mean, come on.
All-time
high
in this market. I mean, we are, on some stocks down 60, 70, 80%. There's some stocks obviously making highs, and obviously in Warren Buffett portfolio, a lot of his stocks are making new all-time highs. So impressive. I mean, long-term Buffett, his way of, investing, and obviously we're a trading show, so this isn't totally Warren Buffett style, but from a long-term investing perspective, just growth at a reasonable price just works in the long run.
He's the GOAT. He's the best ever for.
Yeah, he is. I mean, we can have, there's going to be hot people. Kathy was hot for a long time, but you can see, longer term, is there longevity there in the strategy, just buying growth at any cost? It's obviously, I don't know if there is. But I tell you, Warren Buffett, slow and steady wins the race. It was the same thing back in 1999. Do you remember this, Joel? And I think it was like a Barron's cover with something, and they officially said that Warren Buffett has lost it. Because we had all these growth names that were just ripping higher, and Buffett was lagging. Berkshire Hathaway was lagging badly. And they're saying he's lost his touch. That was like 1999. And literally 2 years later, Buffett stood strong, where Berkshire Hathaway held up very well. It still went down during the tech bubble crash, but held up very well, and everything else just imploded. And there stood Warren Buffett, and he hadn't lost his touch. He just is steady, 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 where you got, the media will really grab the ones that are really flying and say, oh, yeah, these are way outperforming Warren Buffett. There's always somebody outperforming the short run. But does anybody beat him in the long run?
I was looking at Buffett's annual returns because in his letter, right, that came out over the weekend, he always shows Berkshire Hathaway's annual returns, and he compares it to the S&P 500. Only one time in Buffett's history as the chairman of Berkshire Hathaway, only one time has Berkshire Hathaway underperformed the S&P 500 for 3 years in a row.
That's unbelievable.
It happened in 2003, 2004, and 2005. That was the only.
That's interesting.
The only period of time, the only 3-year period where he did not beat the S&P, where the S&P beat him 3 straight years. Only time it's ever happened.
You know why that was too, is because the S&P got slaughtered in 2001 and 2002. So it was the rebound bounce in 2003, 2004, 2005 when Buffett didn't get slaughtered as much, so his stocks didn't come back as much.
Yeah.
So it wasn't even like it was due to his, underperformance. It was due to the huge underperformance of the market, and you just kind of had the 03, 04, 05 correcting from the tech bubble crash. I mean, the NASDAQ fell 81% at the lows in March 2002 from 5,100 to 1,100. That was the index. That was the index of growth. That was the NASDAQ falling 81%. Could you imagine today if the NASDAQ fell 81%? I mean, and obviously valuations are completely different, but that's just shows you the scope of how serious the sell-off became. But Buffett held up well through that. And that's why when we had the bounce in all the tech stocks in 03, 04, 05, where we started coming back, Buffett underperformed. So that makes sense to me too. So Buffett, just unbelievable investor. Shout out Warren. Get him on the show.
Okay, so the question now, yesterday, broad-based rally, almost everything higher, right? Every sector in the green, every index in the green, oil especially. What do you do now? That's the question, right?
I still think there's so many unknowns that I think you're selling into the strength, but that obviously was wrong call yesterday. We're at 230, 433 on SPY, so it's on the strength. We're really another 50 S&P handles off Powell. It's just so many unknowns for me. So I think from a longer term perspective, I mean, yeah, you're probably buying dips. You probably don't want to be 40% cash like I am. So will I look to put some of that money to work in a dip? Possibly, yeah. But I think we're still in a choppy trading environment. I don't think the Ukraine situation, I think it's gotten worse, if anything, because Russia's now taken the seat.
Yeah.
So I just, obviously the markets are focused right now on the Fed and saying, quarter, this feels so good to only being going to get a quarter of a point. This feels so good to have 9 or 10 rate hikes potentially off the table. So the market is applauding that. But it's short-sighted because there's a lot of other issues here. One, inflation is not going away here, especially this has not helped the inflation problem by only going a quarter. Two, what about oil? I mean, if oil keeps going up like this is the biggest cost to everyone. I mean, it was one thing when lumber was going up, at parabolic a year and a half ago, but everyone uses oil. So when you're seeing oil going up 4, 5, 6% a week for 2-3 weeks here and continuing up, I mean, this is going to hit the bottom line for everyone. Does this slow? It could slow the economy in itself to a certain extent, but it's inflationary and it's costing people a lot more money. There's a lot of issues to worry about still.
Yeah. So you look around and say, okay, well, who's exposed to oil? Airlines, cruise lines are your obvious your obvious plays there, but
and we've had a decent rally in some of the reopening names, and we've had a decent rally in a lot of stocks. And if you look, the airlines really aren't participating. American Airlines didn't participate at all yesterday. It was down on the day. Delta had a red small day. You had everything rallying yesterday. Not for airlines, not for cruise lines.
All right,
not
Triple
bouncing
D,
back.
Spencer, bring up my chart. Triple D,
what's up?
take off, and Spencer, guys, take off your geopolitical concerns
All right,
Sure.
hold on.
and your
We can
Fed
do that.
concerns.
All right,
Sure.
wait, I'm just brushing it off my shoulder. Okay.
Okay.
Yeah, we're getting all that off. Okay.
Okay.
Talk to me. Talk
Look at
sense
this
to me.
chart. Look at this chart.
Okay. I gotta make it bigger.
You're bumping up against a major resistance point. How do you
Yes.
take it out today?
4,400. Oh,
That's the number you were talking about, Joel, and it's right there. It failed there yesterday slightly, kissed it. So you got 2-3 bump outs against it. That's your major resistance point.
Yep.
You get above that, you're in breakout mode. Yeah.
I mean,
Again, though, I'm going to say technicals. I'm not using technicals that much in this market for the simple reason is that it's headline driven. So prettiest chart in the world. You get this breakout. We go to 44.20, 44.30. Everybody's like, yeah, we're breaking out. And then you get some negative headline out of Russia.
Yeah, that's true.
Situation.
That's true.
And then
That's
and then you know what they say is, oh, well, that was the fake out. It wasn't the breakout.
What negative headline though? It's been a parade of negative headlines for
Yeah.
a week. What negative headline are you referring to?
So maybe all the bad news is out, and maybe we have to buy. Maybe that's the reason. But I tell you, if there's any more talks that it's going too slowly, or if any more talks about, those nukes that he's got sitting there, that would be a very negative headline for the markets.
Yeah, it would
Well,
be.
I think you can always get more negative. I mean, it's been kind of a standstill for 3 days, has it not? They got the port last night, but I saw the convoy. They're just sitting there. There hasn't been a lot of, there's been, some stuff, but the convoy hasn't really moved in yet. So I don't know. I think they kind of, the last couple of days, there hasn't been a lot of headlines, and that's why a little bit of the relief rally here too. I'm very worried about headline risk in this market.
It is, and that's why I'm just pointing this out, just because intraday basis, right? Also, just to keep an eye on things, and always it's the close, right? And what can happen, and then whatever can happen, overnight is is another thing. But you went from 4,800, you went to 4,100. I mean, if there wasn't a war going, I mean, I'm just looking at it. So there's and we're bid up here. That's the difference. Like we hit it all those other days, and we came down hard. We actually hit kind of this area actually the night of the or after the invasion when we had that 3-day weekend, President's Day. So there it is. It's on the chart, and I'll probably a host of buy stops up there. We'll keep an eye on it, but there's not a lot in there if you get above it. So just look both ways, folks. Look both ways.
I'm into this. I've been in Dennis's camp where technicals don't matter, but no, Joel, I'm with you here. Get me above 44. Call me a buyer. How about that?
You guys are on your own because I'm not using technicals at all in this market. I tell you, I look at my screen.
You never use technicals.
This is how I trade, and it's everybody to their own. I mean, 90% of traders out there are technical. So this is how I never use really much technicals in my trading. I get an idea for where stuff goes, but in my own personal trading, I use very little technicals. I got 3 screens. I used to have 5. I got 3 screens. I've said this before. One screen is completely dedicated to headlines and news. Completely dedicated just to news. Always coming through. I got my trading platform. In literally 1/5 of my one screen, I have one chart, and it's the 90-day. And the only reason I have that chart is because I want to know if the stock is strong, relatively strong, or weak, and that's it. No moving averages, no death crosses, no golden crosses, no oscillators, nothing, just price. And that tells me whether the stock is relatively strong or relatively weak. It's all I need. And that's really all you need, like, because we need
Dennis,
to know.
what I'm looking at this though, I'm not, I'm not telling people that, this is like going to be the greatest rally of all time. To me, this measures the sentiment, okay? And that's what I'm looking. So far, the market is telling me not to worry. It's not doing a very good job. I'm very worried. There's a lot of things going on, but to me, this is it's an indication of what the bigger money thinks, what the managers think, and where. I'm just using it's just an indication. And right now, the indication is that we're good, whatever. Oil at 115. Well, no big deal. Interest rates aren't going to go as high. So totally, I'm not telling, base portfolio, decisions on this. I'm just trying to look at the market technically to measure the sentiment. And right now, to me,
You can't
we're
argue with it.
worried.
You
The
can't argue.
sentiment's there.
You can't argue with it, Joe. I'm with you. You can't argue with it. Let's bring
Yeah,
on.
you can
We've
short the
held
hell
up
out of
well.
it here.
Yeah.
But if it breaches this today or tomorrow, whatever, then for the short term, I don't know, for the week or the month or the year or 5 years, if you're short here, if you're shorting up here and it goes through there, I don't see I see a lot of air. Maybe a little breather.
Let's
a
do
lot
an
of air.
exercise
Wait,
for Ed in the
I
chat.
also want to bring Mark
What?
on the show, but what's
Ed?
Let's do an exercise for Ed in the chat first. He's
What is
asking
that?
about the 50% retracement, and I'm going to do one right now on the SPY.
Oh, it's
So-
way up there.
So let's
it's
go.
way up there.
480 on SPY, which was the move, the high
It's-
after January. Let's take it down to 410 on SPY. We're ignoring futures. We're just looking at SPY because that's the intraday trading of the futures. 70, we've lost 70 SPY. We've lost like 700 S&P handles. We've lost 70 SPY from the high to the low. So 70. Let's add on 35. You get to 445 as the 50% retracement.
There it
That's
is.
where I think you potentially might go, and that's where I think you potentially stall out. So here's your 50% retracement trade is your 438. You've had a good run. Maybe you get a little more oomph here today, but if you just want to use technicals, you got to think you're going to run into resistance here as people start to get their losses back. And then 450 is a big level too. So 445 to 450, I think you get, some resistance coming in.
All right,
but again, we don't know
right,
anything.
Mark,
Nobody
exactly.
knows what the next
And,
headline is.
and there's
I'm
three
bringing-
tops right there. And there's 3 daily highs there too, reinforcing it. So that's even better. Mark, help us out, Mark.
I can help you out. You guys are shouting over each other. Come on.
We need that. We watch CNBC too much. They shout out over everyone.
That's right.
Mark, talk sense to us.
What do you want from us?
Well, I think the key level here is 45.95. That's the swing high off the first bottom. And by the way, we got a 618 retracement off that bottom. So
Yeah,
I think looking at a 50% here is not really relevant.
Okay.
It's the 618, which took you up to 45.95. There is short-term resistance at 44.20 to 40. I agree with that. But I think the bigger opportunity is buying the weakness here. We've been in a rolling bear market for the last year. NASDAQ officially went into a bear market. So the question is, how low will the S&P go, if that matters to you, if you're trading SPYs? Does it go to 3850 and indicate a 20% drop? Maybe. Does it test 4100? Probably. But I think there are real opportunities. So I've been buying dips. I've actually done something that I preach against. I've bottom fished in one name, but I'm looking at themes. I'm looking at a food shortage because Ukraine provides a lot of Europe's wheat, a lot of the world's wheat and corn. And I'm looking at fertilizer shortages because Russia is, I think, 40% of the fertilizer in the world. So that points me toward agriculture type stocks, Archer Daniels, Bunge, Corteva, which is a spinoff out of DuPont. And I think something that's really important to know here is there's going to be a big push in this country against the green movement. We've got to become energy independent again, and so does Europe. So I think that we're going to get an unleashing of the fracking stocks. The green people are going to put us into the grave, led by Larry Fink. I think this is anti-American, anti-freedom, anti-democracy. And you rarely hear me go on a rant. And in general, I'm for saving the environment and climate change and so forth. But right now, what the green movement has done is it's stopped the banks from lending to the energy companies. And this is led by Larry Fink and CalPERS. It's really dangerous. And so I think we're going to see stocks like FANG and EOG. FANG controls a big portion of the Permian Basin. There's oil sitting there. We're importing 10 million barrels of oil a day. It's completely unnecessary.
Couldn't we kill two birds with one stone, Mark, and wean ourselves off of Russian oil and do good for the environment at the same time? That's what he's saying.
Well, but we have to produce it. It's sitting there and we're not producing it.
No, I'm saying forget the oil. I'm saying the other alternative energy sources, right? That's what he's saying.
Well, alternative energy is really nice in concept. It's not there yet. Whether it's solar or wind, it's just not there. And so unless consumers are willing to pay $5 at the pump for a gallon of gasoline, we've got to roll back some of this green inspired climate, what is it? ESG. ESG is worse than Putin, I think.
Oh, come on.
No, but that's why do you think we're in this problem? Because Germany shut down their coal mines and their nuclear power, basically. And they became totally dependent on Russian oil and gas. So Putin has this huge lever and they know it. And they haven't shut that gas pump off. What John McCain said is really funny, that Russia is a gas station masquerading as a country. That's all they have is their oil and gas reserves. We've got to turn them off, but right now there's no alternative source of energy. So there's the rant, but I think there's opportunity in energy stocks here on a pullback like FANG and EOG. I think there's opportunities in agriculture, seed stocks. And I also think there's opportunity in some of the fallen angels. I bought a stock yesterday called EPAM. EPAM has dropped from 720 to
what's the ticker?
That's the Russian stock.
Oh yeah.
Well,
what is this? What is this?
EPAM. They have a worldwide roster, and I almost never bottom fish. 720 down to 195. They have 14,000 programmers in the Ukraine. But they're helping digitize the world, and they pulled their guidance, which is why the stock was down 40% 3 days ago. But this company is not going away. They have programmers in other places. So this is just an example. You don't follow me into EPAM unless you're prepared for big volatility. And by the way, my average cost is 204.50, and it rallied to 250 yesterday. So I got lucky. That's
you bought right at the bottom.
Bottom fishing. I missed the bottom by 10 points. That felt
That's
like
the bottom in a $200 stock. After this fell 200 points.
That was a $700
yeah,
stock.
Before the Ukrainian crisis, before they pulled their guidance, they were expected to earn $12 a share. So I'm looking for stocks like this, where there's been a massive overreaction, where the company actually has earnings, not just eyeballs or revenue. So I'm not bottom fishing in some of the weak stay at home, shop at home names, but I think there's opportunity here. So I'm buying every significant, washout on the opening. And here's one for everybody. And I really like this. Fidelity has an inflation ETF, symbol F as in Frank, CPI. And it's been outperforming the S&P for about a year. And on dips, it goes down
What's
less.
the symbol?
FCPI. On dips, it goes down less. Yesterday on the rally, it went up more.
It was in this.
So it's interesting because they've got some big cap names. It's based on energy and pricing power. So their two biggest holdings are Apple and Microsoft, so they don't get too far away from the S&P. But there's a nice exposure to energy and commodities in there. And For someone who wants a broad-based ETF, and there's not a lot of assets, only about 250 million, so it's not a huge.
This is something you want to trade intraday. Don't try to trade the stuff pre-market or after hours because it's thin. Like I mean, we're looking right now; it's 10% wide. You're going to get killed. So just wait until you're thick in the middle of the day to buy something like this. Don't pay up for something like this.
This is I bought some of this. This is how I'm participating in the broad market instead of SPY, which was my normal, place to park money when I wanted equity exposure. I think this gives you a little bit of an inflation boost, and it seems to be cushioning the drop. So that's not for traders. This is for people who want to put serious money to work in the market, because I think inflation is going to be with us, obviously.
So wait, Mark, on the EPAM thing, you've just gained $40 in one day. What are you doing now?
I'm just sitting on it. I've written some covered calls against it. The premiums are absolutely off the charts. You can get $25 writing a March 50 call that expires in 2 weeks and 2 days. So I'm willing to sell it at 160, 260, 270, but I like the stock long term. And my strategy here is not to take the short-term profit, but to try and reduce my cost even further. And when this crisis ends, this company could be looking at a double, which would still be, by the way, 45% under its high from just how many months ago? 3 months ago, 4 months ago.
But I want to stress that what Mark said before this was looking at names like EOG and FANG, Diamondback Energy. Not this is
FANG stocks.
This was a higher risk.
Stocks, yeah.
This was a higher risk play.
Oh, very high risk.
Yeah. Those other ones are a little bit more stable right now. So just know that going in.
We're ripping a little bit here.
We've ripped not a little bit. We've ripped a lot.
Yeah.
Since the open here, or since we started the show.
Since Mark came on,
Mark likes Mark.
Do we got any news or not?
I think lack of news helps this market more than anything. As long as we don't get some crazy headline coming out of Ukraine, the market is right now happy that Powell said the quarter point. And let's talk, let's take it back. We're talking inflation. So here's the Fed. They're not obviously going to be as aggressive as some people thought because they already just said that they're going to go a quarter. What about the inflation problem that we have here? Does this, move the needle a quarter point? It doesn't feel like it's enough to me to really move the needle on anything, Mark.
Well, it's kicking the can down the road, but I think Powell did a good job yesterday laying out his thinking. Today, he may sound a little more bearish. I think yesterday was a gift to the equity markets, but he's before the Senate today, and I have a feeling he's going to be a little more hawkish to the Senate. But I think one thing, so my bottom line is, I don't think we made the final low. I don't know what's going to push us to a test of 4,100. But one thing that does bother me here is there's so many charts that have been sent around and tweeted by pretty smart market participants. One of them is, you buy the war because it's a short-term disruption, and long-term, it's been bullish. Well, long-term stocks have gone up since 1940, so that's a little specious. The other thing is everybody's showing the VIX chart, that when VIX gets over 30 or 35, that's a good time to buy the market. And that's all true historically, but it's not precise in terms of timing.
That's true.
So there's a lot of people taking comfort from these charts, and they're getting broad exposure on Twitter and in market letters and so forth. One of them came out of Schroders, and another one came out of, I think, JP Morgan. So I think I agree with Dennis that it's a time to be respectful of the market, whether you use technicals or not, but I think there are buying opportunities here. And by the way, I think there's going to be a major bottom in 2022 that's going to lead to a 30-40% rally. So the question is the bottom now in mid-March, or does it come in October? But I think you've got to be looking for buying opportunities in the stocks that are positioned for an inflationary environment.
All right, Marc Chaikin joins us every Thursday, a founder of Chaikin Analytics and longtime market veteran. Marc, we'll talk to you in a couple of weeks. Have a good one.
Yep, be well.
All right.
Thanks so much, Marc.
Thanks, Marc.
All right, that was interesting. I definitely don't agree with some of that, but hey, to each their own. That's why
I agree with a lot of stuff. And Marc takes the longer term approach too sometimes. I mean, and obviously, the strategies of being down names and writing some covered calls on them, is sometimes a decent strategy as well. So, he picks up something right the upper 250s, picking up some extra points. I mean, you do take the risk if the crash, and there's basically been a crash and that stock continues when it goes from 400 to 200 in a day or in 2 days. But I mean, there is opportunities, and we still have the Tina trade. Because where do you go? And that's why, even though I've been a little bit nervous with this market, I never moved to 100% cash. And yes, I've raised it up and I'm holding cash, but at a certain point in time, you do have to put that cash to work, because where do you go? Where do you go to fight inflation? If you're in an inflationary environment, at least if you're in companies, at least their revenues are going up with you. And, and you get into different inflation stocks and obviously, participate. But I just don't know if you just move to cash in an inflationary environment, that's sometimes the worst place to be.
Yep.
So it's a tricky market to be bearish on longer term. And I do believe if you get, like in chat saying, there could be a ceasefire, you get a ceasefire, you could be at all-time highs. I mean, I'm not joking. Like, this market could just rip, literally could just rip the S&Ps a huge amount. I don't think that's happening. Personally, I don't think Putin's going to stop until he gets what he wants, and he wants the whole country. So, and I don't know if it stops there either. So, but, and so I don't think that's on the table, but I mean, we don't know what the next headline is going to be. We don't know Putin's thinking. He has been pushed into a corner where the whole entire world is against him, the entire world, and even some of his own people. So, is that out of the realm of possibility? He could back off. It's possible. I don't think he will, though.
Yeah.
So, but we're not in his mind, so we don't know what he can do next.
No idea.
So that's why I just go back to the headline risk in this market, and we don't know what the next headline is. And you can have the prettiest chart in the whole world, but when you're in a headline-driven market, that's what's going to drive it. I mean, yesterday was not a technical breakout or anything like that. It was a Powell-driven headline rally. He set a quarter. And again, I'm going to go back to, I make my money trading headlines. I don't make my money looking at pretty charts. And I'll tell you, the people who say you don't make money off headlines probably don't trade headlines. I'll tell you, the headline traders, and in this firm at Bright Trading, there's a ton of them, they all do pretty well. So the headlines, if you're just buying off that quarter, let's just go back to the scenario. When those words popped out of his mouth, 1/4 of a point. What time was that? Do we know?
I can tell you exactly.
Go tell us what time that was.
Because I was watching it.
It was a little after 10, because the market took out the pre-market high, and it looked really good, and then it had a flush, really quick flush, and I'm like, oh boy, good thing I didn't buy the pre-market high. And then when I canceled the order, and when it went back up through the pre-market, it was gone. I'm like, what? What time was it?
He got asked straight up for his thoughts on the March meeting. That was at 10:26.
Yeah,
because I made a note of that.
Yeah.
So that's when he
10:26.
Yeah,
when he said it.
He was asked, like, "Hey, what do you think about March?" And he was like, "What?" And then he's like, "Well, before the Russia-Ukraine war, we were thinking this, and that we were thinking like we were going to raise and we were going to make some progress on
right here. It was this bar right here.
Right, I'm bringing your chart.
And if you bought the top of that bar, even let's just say you're slow as crap, and you bought the top of that bar.
Yes.
So, and which one are you looking at? That's the top left, right?
Yeah, you see
So
the arrow?
Point to it.
There's the arrows there.
Yeah. If you bought the top of that bar and you're the slowest trader in the world and you're buying it 5 minutes after the fact, you took no heat yesterday. You really took no heat, because it had a little bit of chop for about 20 minutes after that, an hour after that, and then we just continued to go higher. So I was actually on the road yesterday. And again, I don't like trading the 10 to 2. I should have been sitting at my desk, though, because there was a huge opportunity there. And I had, one of my trader buddies, call me and says, like what Powell just said. He said 1/4. I was like, he said that? I'm like, how much is the market up? I'm like, I didn't have to think, is the market up or down? I'm like, this market's going to rip on this. So again, people don't want to know. And yes, the computers trade the headlines. They trade the headlines, but
they overtrade them too.
They overtrade them. They overshoot. They go all over the place. Just common logic. And let's take it separate. Let's separate it here. If you're a long-term investor and your time horizon is 5 years, I agree. You should ignore the headlines because it's going to shake you out of stuff. But if you're trying to be a day trader and you're ignoring headlines in a headline-driven market, I think you're going to get chopped up and you're not going to be doing that well this year. So I think you got to combo the approach. When we're not in a headline-driven market, I'm using more technicals. When we're in a headline-driven market, I'm not using as many technicals. And that's what it is. And I mean, yesterday, Putin says, or you get Powell coming out, say a quarter, the market's going up on that. I don't care what the chart looks like. So, and the reason that most people out there say don't ignore the headlines is, one, people don't want to pay money to Benzinga Pro to get the headlines. They don't. Nobody wants to spend any money. I don't know how many times I interview a new trader and they're like, well, I can't spend $90 a month. What do you think you're going to be in a trading business and not spend any money? Is that what you actually think? What business can you be in and not spend money? What business can you be in and have no expenses? You want free trading and you want to make money off the market. How do you expect to make money as a day trader? Long-term investing, completely different. But as a day trader, you're trying to spend zero to make money. How is that a business? I have expenses like crazy, like quotes. I subscribe multiple news sources. I mean, this is, just, a business. As a day trader, this is my business. And I'm talking to the day traders out there because the long-term investors will come at me on Twitter and they're going to say, you should ignore a headline. I'm not talking to the long-term investors right now. If you're a long-term investor, just buy and SPY every time it pulls back 10%, and you're going to hold it for the next decade, you're probably going to make money, and it's probably a good way and approach to the long-term investing of the market. But as a day trader, if you're trying to be a market timer, and you're completely oblivious to the next headline, I think you're missing a huge opportunity. And I will tell you, in this firm, I don't know what we have. What do we got? 120 guys? I tell you, our traders aren't going to, a lot of ours aren't ignoring headlines. I will tell you that. So you'll be shocked at how many traders actually do very good trading the headlines. There's a myth out there on Twitter that headline traders, you see that all the time.
You see it on CNBC.
You read the headlines and eventually you're delivering the headlines as a newspaper. I screwed up the quote, but it's wrong. It's wrong. I've made money for 21 years trading headlines.
Well, it's really picked up.
It works.
It's really picked up, Dennis. We've, just the way, it's funny how, even before the pandemic, though, and we've been discussing and, your different trials of, trading and the, your evolution, different things, arbitrage and stuff. But it just seems that really it's really picked up. I mean, the environment, I'm not going to attribute it to any one specific thing, but with algorithms and what's been going on in the world and COVID, I mean, that's all. It's all it's been. So it's a great point. And
well, people were just spoiled in 2020. You didn't need to have any. You could be trading for free on your Robinhood, spending zero on news, spending zero on information, and making money because the market was just literally going straight up.
Yep.
But we're not there anymore. So now if you want an edge, you got to buy an edge. And there is, information. And I mean, CNBC, Powell, that's an easy one. But there's all kinds of headlines every day. And Benzinga should be promoting this more. I mean, they don't even promote this whole segment should be a promotional piece for Benzinga Pro because it's a reasonably priced news source. Here I am on I never promote Benzinga Pro very often on the show. But I'm just saying, you've got a reasonable. Charles does a great job. Charles is a squawk guy on Benzinga Pro. He does a great job squawking out the headlines. I listen to Charles. I have him going. And he'll call out the important headlines. Like, oh, I missed that. So it's awesome. I've got somebody in my ear, too. So obviously, we're doing the show. But Charles is squawking headlines all the time. So I get to my desk, and, I've got Charles on, and he squawks out what he sees going by. And Charles has been with us. How long has Charles been with us?
Forever. He's been there, I think,
right from the beginning.
Besides Bert and Jason, he's the only one that's been there longer than us.
Yeah, 9 years maybe. He's like, yeah, exactly. Longer than you guys.
Do we got a promotional code for the chat? Because we got more people.
Yes, yeah, I say it every day, and I'll put it again.
Put it in there. And I'm not saying, try it out. Just try out, and see. Because maybe you're sitting there. You can get it. There's free trials. Is there not a free trial to Benzinga Pro?
Oh yeah.
No, Ben K. Benzinga Charlie did not retire. Although he did. he did just take.
But there's free trials too.
Okay. Two things. There's always a free trial for everyone. 2 weeks. Pro.benzinga.com.
Try it out.
I just put the link, and the same link that I put in the chat is also in the description of this video. The link takes you straight to a checkout page that gives you 25% off with the promo code PreMarket Prep. The link takes you straight there. It's pinned to the top of the chat right now. I'll put it on the screen there, but it's clickable.
And I get this all the time too. People
Yep.
don't have to pay for news. So you're going to go and waste all your time searching on Twitter for the potential to find a headline that is driving the market, when I will tell you that it shows up on Twitter way after it shows up off the major headlines.
You don't know
because
what
the
you're
people who
looking
are
at
posting it on Twitter are reading it off of a major news source, and you want the press releases. Pro is a great, way of getting the press releases. You got to check that. So, when you're in your Pro, make sure you check your press releases so you get all the press releases coming through. But I mean, yeah, you can find out the news 5 minutes after or 2 minutes after everyone else when everybody's already traded off of it. But the people who want to keep saying that you don't make money trading headlines are the people who don't trade headlines. So, and if you're a long-term investor, you probably don't need them. But if you're a short-term trader, try it out, man.
Again, the link that's on the screen, the link that's pinned to the chat, and the link that is in the description of this video, all take you to 25% off code for Benzinga Pro. But everyone can get a free 2-week trial. Pro.benzinga.com.
And Twitter is all noise too, and that's the problem too. And I mean, and some people complain, there's maybe too many headlines in a news feed, and I can't separate the noise. So you got to, that's what Charles does a good job. He's shouting out, what he thinks is really important. But I mean, all I'm saying is, it's just my pet peeve when I see, he makes money trading headlines. I do. I make most of my money trading headlines. So there you go.
I'll put the link, the main link, in there as well. It's in the chat. Pro.benzinga.com. Say it again. Okay, now let's get to some of those headlines. We had a lot of headlines on the earnings front here. Let's go to Snowflake. I think your biggest mover this morning of the earnings stock is down 19%. The EPS, where am I now in my Pro? Let me see. Let me show you guys what I'm seeing while I look at this stuff. This is how I use my Pro every day. I've got my news feed on the right.
Oh my gosh, it's off the low. That's a bullish looking chart.
All right,
Snowflake.
Yeah,
Snowflake. The EPS came in higher. The sales came in higher. What were their guidance? Product sales. I don't know what I make about that. You're seeing a lot of lowering of price targets. So look at all the analysts this morning. Maintain overweight, lower price target. Maintain buy, lower price target. Maintain overweight, lower price target. Maintain buy, lower price target. So a lot of analysts playing price catch up here this morning as the stock continues to get punished. But let's pull up the chart, Joel. What do we got? Yeah,
it's one of the most bullish charts I've ever seen in my entire life.
Let's come off the lows. we look where we bottomed, though. So here's where technical analysis works. I just poo-poo technical analysis for 5 minutes. But when you get a news event, I go to the chart and say, okay, what's the low? This is like a simplistic trading. I mean, that's really what I do. People think everything I do is so complicated. I'm the most simple trader ever. Oh, Powell's this quarter. Well, that sounds bullish. I buy stocks. Oh, the stock's got bad news. Okay, let's go look at the 90-day and see where it bottomed before. Maybe it'll bottom there again. I mean, this is just not rocket science. This job is just not rocket science. One of my traders in our firm says this job makes me stupider every day. He makes money all the time, like major money. And he's like, this job makes me dumb. But I mean, it's just, if you can get to a point where it's that simple for you and simplistic, you'll be a good trader. So where do we bottom, Joel? Where do we bottom?
Oh my gosh, we bottom under $200.
What is that number?
That exact number is 184.02.
Look at the low on May 14th. Holy rocket scientist here. 184.71, the low on May 14th, the low of the move. It bottomed almost to the penny. Almost to the like right there. The whole, go out to your year and a half chart. Go out way out. The bottom of the last 2 years is 184.71.
I can do it on the
bottoms
monthly.
at 184 in the same exact handle. Is that coincidental? No.
Look at that one. There it is, right there, folks. 184.71.
Right at
all-time low. All-time
right
low.
at the same number. That's incredible.
It just and I could even do a little Dennis rant here, if you're traded after hours and you see a stock doing this, and you try and sell into it, the fact that you just went to look, or spent the time looking at the chart. I mean, this is a 15-minute candle, but we could probably, I wonder, that's probably like happened in 2 or 3 minutes, right? Something like that.
Yeah.
But now the only thing I was going to say is you missed the bottom for now, and if you want to buy this thing, you're just going to have to figure out a level, use a shorter term chart to look at that. It was down there for a little bit, Dennis. It was down there for this is a 15-minute, this is 15-minute, and then you got this green bar here. Even if you waited, well, it's not green, it's a cyan. But wow, what a rally! Bottom of yesterday's range is way up at 250.58. I don't think you're going to see that. So maybe wait for it to back a fill. Use your short-term charts right now because buyers have just been stepping up since that 184 low.
I mean, who's selling it at 184? That's what I want to know. They're not looking at any chart at all. So there is a point to looking at charts. So I get the news, I see the move, I see the direction, and then I go to the chart to see where is it going? Where is it likely to bounce from? That is just a level that jumps out like a sore thumb. Oh,
yeah, that's all there is. That's
the all-time low. Bounced right at the all-time low. And if you just, and obviously took a lot of guts. I know who bought at 185, but they're a genius. I'm trading a million things. I never brought up Snowflake. It's not my cup of tea. But looking at it, hindsight capital is always 20/20. It's easy to do. And there's going to be other times where it doesn't bounce at the lows. But, you could take a shot. And it starts going 182, then you get the hell out. But I mean, after hours is pretty quick. But anyways, we stabilized there and we kind of bounced there.
It did.
It didn't just like boom, boom. It kind of sat there for looks like for about a half an hour right around that. So it gave you some time where, it's stabilizing at the old low. So maybe I can take a shot here now because I have some stabilization. So I wouldn't say that the trade was buying in that first big, ugly pink bar that you have there. I don't know why they're pink because after hours. Yeah. But I mean, maybe when you see the second and third bar and the lows are right in the same area, now we've stabilized. Now we can maybe take a shot at this thing. And now it's $30 off the lows. So the people who are, coming in here and saying, oh, snow is cheap, I'm going to buy it down $48. Well, I mean, they're selling it, they're buying it from the people who are selling it that bought it last night when it bounced off the lows. So I would say, argue now it's in the middle of nowhere and there's no trade.
Now it's tough. Yeah, now it's tough.
Yeah.
Also the one factor now, I don't know what the volume is in the options market on this, but what if you just took a wild stab at the 200 puts? Going into the report, you probably paid a lot of money for them, right? And the stock's at 185, 190, and you have ability to trade in the after hours. You could take a position, right, in the stock. So I think that's another reason too that you see that kind of buying. But I don't know. If there's not more than 90 days, then it there's not more than 90 days. But that is usually don't trade. You usually let stocks trade for a while before the IPOs and stuff.
Yeah. Well, it's tricky, but I love the 2 days. And we're going to do, and Joel and I have been talking about this, we're going to do a swing trading course coming up in the next 4 to 6 weeks. We're going to put it together and we're going to do a 3-hour educational event. Our next educational event on a Saturday morning is going to be a swing trading course. And it is going to have a lot of technicals in it, the way we do them, which is very simplistic. But I mean, it's going to have a lot of other stuff too. And I can guarantee you there'll be some headline trading even in there too, even, for a swing trading course. But I mean, looking here at, different lows and stuff, I'll trade something if it's got a double bottom in the same area. Like that's what I really like. And I learned it from you, Joel, is when I'm looking at even the 90 days, it at least shows me the last 2 days. Like I'm just seeing 1 day candles, right? When I'm looking at the 90 day on mine, I'm seeing one candle each day. So it's telling me, okay, well, I got 2 days in a row where this topped on the same area. That's a potential area where it might reverse from, or that's a potential area where it might bottom from. Like, let's go to ARKK. We're doing a technical analysis lesson here. But ARKK, go to 3 days ago. So if you go and you can see on the 90-day, look at your top right chart. That's what I'm looking at. The top right chart is the chart that I'm looking at all the time on my screen. But if you see those 2 highs in the same area, so Joel's going to blow it up a little bit bigger for you, but don't ignore yesterday, but look at the 2 highs from the previous day.
There.
As soon as the ETF could not get above the previous day's high. And if you actually look and break it down and go into it from those 2 days, we rallied up there, we bumped up against it, we couldn't get that, we tried it again, we couldn't get it. As soon as we couldn't take out yesterday's high, that's a sell signal that, okay, if I'm in a swing, I should now lighten up here, because now we're not making a new high. For 3 days in a row, we made new highs. Now we did not, we failed. That's a turnaround signal. So that's where swing trade longs on ARKK should have been sold as soon as it did not make a new high on March the 1st.
Yeah, and it also, you would have been thinking about, like, yesterday, 2 days ago, you've been thinking, can it get to 71.91, right? Because if it gets through 71.38, I'm going back to the thinking that you had before, what, that was Tuesday, right? So that logically gets through 71.38. There's your next resistance point. The other thing that maybe you could have used on that one, like, and it's also, hindsight now. All right, you missed the double top, but it went red, right? It opened red, 68. Well, it opened 68.47, and it went red pretty quickly, right? So you lose the closing price. So the people that had, profits from, and we're talking about shorter term here, using the closing price. But I noticed that with Kathy's stocks, they do.
She does that a
Yeah,
lot.
they do. The ETFs, not the stock that
they
she
all
trades.
do it though. They all do it. I
Yeah.
mean, when you see, and Joel is very good at citing this, and he'll sometimes text me one even, but when you see a stock that's had a big move, and then all of a sudden the next day it's struggling to get through that move, that's like, oh, you give it a chance, it might go through it, but as soon as it starts to fail there, and then that's okay, well, this could be a reversal point, because technicians look at that stuff too. And maybe this is the short-term day trader. There's obviously, and that can be involved in swing trading too. As a long-term investor, you're not caring as much about that stuff. But even as a long-term investor, I mean, that's the funny thing is, and I've always said this: Warren Buffett is a day trader the day he is trying to make a trade. So we're all day traders at the point of execution. So why not, even if you're in a long-term investment, why not try to maximize your execution by using a little bit of technicals at the time of execution? You say, I don't care, I've been in this for 5 years, I'm just selling it. Well, I don't care. I like money. So if I can get a little bit more by just reading a chart for 5 minutes, I'll do it. So, I mean, we're all day traders at the time of execution.
That's a good point. I like that one. Okay, let's do.
I just made it up right now.
All right, let's do Best Buy. Cool.
Best Buy.
All right. Give me a second to pull up the numbers in Pro because I had another stock queued up there. All right, Best Buy earnings this morning. EPS in line, $2.73. Sales missed by a smidgen, 16.36 for $16.59 billion. They gave some fiscal year EPS guidance that came in mostly light. Their sales guidance was also light. And they're raising their quarterly dividend from 70 cents to 88 cents per share. What's the stock doing? Oh, interesting.
Expectations relatively low since their shit the bed quarter, for lack of a better word, last quarter when the stock gap down $20 and then continued to erode. So expectations were low. So if they said anything okay, it was probably going to rally. Last night, somebody was nervous as hell on this report. They were trying to sell it all night. It was trading red all night. It was down 98. I actually contemplated taking it long just into the report, just because they were giving me a $2.50 lead, but I didn't have the guts because it was like, it felt $20 last time. It was like $2 lead didn't feel like enough, so I didn't do it. And holy mackerel, did the news algos they traded this thing down to $91 on this headline again. Again, I'm going to tell you, some of these news algos that are running are some of the stupidest algos I've ever seen. We go back to a decade ago or 15 years ago, before algorithms were just everywhere. A lot of them are really sophisticated. There wasn't a lot of like dumb algo money. There's so much dumb algo money out there right now that just do dumb things. And that's because you have dumb traders behind dumb programs. So, I mean, there is literally anybody who opens up any retail, like, not a Robinhood, but anybody who opens up, there's a lot of retail brokers that offer algorithms now. So there's just a lot of traders. I'm not saying retail, they have some smart traders too, don't kid yourself. But there's a lot of algorithmic programs out there that anyone can get now with very little, knowledge of the markets. So there's algorithms running that just aren't very good. And I can't understand how this news algo. Maybe it's the smart ones are good.
What's
and they're
going
way
on?
off.
Crude just took a sorry, Dennis.
Oh shit!
Did
Yeah.
we get
Holy
some
cow.
news
Yeah,
here?
we just absolutely
What's some
exploded
news?
there.
What's going on? News me.
Yeah, cancel all orders.
I just saw that crude headline. Holy cow!
Cancel all orders.
What's going on?
No providing liquidity when you're seeing stuff. This is like SPY's not moving, but you are
Yeah,
a good
crude-
eye,
Crude
Joel.
just nice
Holy
one.
mackerel.
Crude and gold too just now as well.
Yeah, what's
Crude just literally fell. What do we just fall? $4? $3 a barrel right now.
well, if you want to go back a little bit farther, it's $6.
Oh man!
Oh yeah, right.
There's rumors of a deal with Iran. Oh man! All right.
Oh, to get more oil.
Yeah. So all right. So we
wow.
See, the spoons were rallying the whole time ahead of this too.
So we talked about weaning ourselves off of Russia. This is how you get. This is how.
Dennis, you can't trade the news.
No, there's no. The oil chart looks too pretty. Too pretty. That Iran headline doesn't mean anything.
Nope, not at all.
No, not at all.
Yeah,
Headlines
not at all.
win, folks. Chart on it. USO is all-time
Yeah,
high.
CNBC,
All-time
they still
highs are
haven't.
supposed to continue to go up.
Look at that, 4,400.
Oh, there's a
Here
headline.
we go.
Headlines move markets.
4,400.
Wow. Yeah. Deal with the.
I don't
devil.
know about this, man. I mean, it's
Deal
a
with the
headline.
devils, right.
The market's reacting to it. I mean, I don't know. We'll see. All right, and
Holy cow! Talk about a deal with the devil. Yeah. Wow.
Deal with the devil.
I mean, that's
Well,
what
no
this
offense to
would
the
be.
Iranians out there that
That's
are
what
listening to
this.
the show right now.
Sorry, I'm
We
sorry.
love to say, but
I'm not
Gee.
sorry. I'm not sorry. I'm not sorry. I'm not.
4,400. It's shaking. 0375 just printed. 07. There you go. There you go. 4,400 is in the headlights. Look at that. Boom. Right
Holy
through it.
Ow. Oh man. All right.
most impressive. Most impressive.
Where do you go to now in crude, huh? Yikes. There you go.
I'll just add that I filled up my tank last night. Most I spent, most I've ever spent, I think. On
Yeah, I mean that's one thing. If I start driving back downtown every day, man, holy mackerel!
yeah, no
that's gonna be
kidding.
a lot of money.
No
but,
kidding. All right.
sorry to interrupt you, Dennis.
No,
That
I
was
mean
just-
that
Interrupt away.
that
That's
just
a crazy
broke.
headline, man.
So we are approaching the high of the day now in the stocks in the indices. So look at the S&Ps, the Nasdaq, the Russell, the Dow. Every index future now approaching the high of the day.
Yeah.
Holy cow.
I mean, okay, so lots of implications here. We're just, getting the news here now, but obviously oil stocks go down. But, again, think about your airlines. American Airlines is ripping higher right now. I mean, this makes
CNBC
sense.
needs to watch the news. They're still talking about oil at way up there. They still haven't got this headline yet. Oh, futures turn
CNBC's
positive.
always lags us.
They've been turned positive. They've been positive almost the whole time. Anyways,
CNBC is always. So here's a funny thing: you trade headlines. You see it in the Pro, or you see it, from the press releases.
Yeah,
and then like it trades, and then it starts going up, and then it comes back down because they're not really liking it. But I'm like, oh, I'm on the wrong side of this. I'm like, well, wait for the CNBC pop. Then they break it on CNBC, and then it pops again, and then the traders already decide they don't like it, and then it comes back off again. So you'll get a second move off the headline when CNBC breaks because so many people are watching CNBC, but they're always 5 minutes later. So
Mitch comes in with a good point. Also, look at your cruise lines and you look at your airline stocks, right?
Yeah, these are ones that are going to lift on this headline. So and you are lifting right now. They've been beaten up. So you are seeing right now. You're seeing some cruise lines.
There you go, right there. Look at that.
I mean, there's a trade. So
there's a good news algo there. That's a smart news algo.
That's a smart news algo. The relationship-based ones, Joel. The relationship-based ones. Those ones are the smart ones. So, and you're seeing it clearly in the pre-market here. And maybe we weren't on it. When did this headline break? A little while ago?
Yeah, I just was like yelling at our news desk, but because I didn't see it, but they beat me to it. They had it 15 minutes ago.
Yeah, and it just started.
Really?
There was an opportunity if you were just so our news desk. We're too busy on the show to know.
Oh man, did I miss that 15 minutes ago?
This is why I didn't see it. Okay, because I was like,
show us the headline.
Man,
We just got done promoting headlines. How much headlines in the markets, and then you have this. Show us the headline. Traders circulate tweet from I have Read it.
All
I
right,
can't read
Trader
it.
Circuit. Here, let me make it bigger for you. I'm just gonna,
844.
I can't see it.
all right. I was like, guys, you don't have the headline. They're like, no, it's because you didn't scroll back far enough. Traders circulate tweet from this guy. I've received definitive news that within the next 72 hours. Oh wait, that's that a nuclear deal will be signed. No, that's
Yeah, that's not
Hold on a
crude.
second.
Yeah,
that's
that's
not
You
nuclear.
had it. You had it though, because
No,
you
no,
said
no,
you
no,
read
no,
it to
no.
me.
That is the tweet. That's the tweet. That's the tweet. I'll read the tweet. A nuclear deal will be signed in Vienna, even if it might take a couple more days or so. What appears to be certain is the deal will be reached. Iran's oil is returning to the market under golden circumstances. So that's what the tweet said, and that's the tweet.
Now go to the chart and look at when crude started selling off. 844, I'm imagining, is when this huge first bar happened.
I think
Again, this is the case in point for having
there was a delayed. I
headlines.
think there was a delayed reaction there.
It's right.
Well, there was an initial bar though, right? So you can see the initial move down, yeah, and then obviously the continued, and we don't know. Obviously, there's probably been people who maybe knew about this before. So there's always people who know about stuff beforehand. So, anyways, it's a huge move down. It's related to headlines once again. Prettiest chart in the whole world, matters zero when you get a headline like that.
And
supply
again,
going up, not good for oil stock.
And to those who saying, yeah, it was a tweet, so Twitter's good. Yeah, were you going to see that tweet? I mean, I don't know. I don't know about you. I'm not following that guy Reza Zandi on Twitter. Okay.
Neither am I.
Yeah, I wouldn't have seen that tweet. I wouldn't have seen that.
That's
tweet.
why we have a team
and that's why we have
looking through those for you. They're working for you.
And that's what the squawk does. Like
working for you.
If your eyes aren't glued to the screen, it's okay. We squawk the big stuff. Okay, so it's said and spoken out loud, and whatever. Sorry, Shelly, I didn't see that. We got a lot going on here. We didn't cover that many stocks today. I apologize for that. But,
yeah, actually, wow. Got to hop here 9:01, but fun show. We'll catch up with everyone later.
God, a lot going on. Yes, information overload is overload is the bottom line here. A lot happening. We didn't cover as many earnings as I would have liked. We do have Peter Tuchman here though. So oil is bounced a little bit there. So that was a big flush. Interesting reaction. How it was so delayed.
And it does. It gives you an opportunity. It's telling you the news algos will get the news algos. Spencer, I know I trade headlines. The news algos will get the they get the beginning of it, but then there's always the dust settling, and then when the humans come in, and sometimes the news algos get it wrong too. So there's often an opportunity where the news algos just flat out get it wrong. So I mean, everybody for themselves. Everybody's got their own strategies. You've been making money in this market, for years, not trading off of headlines or not using news. By all means, continue to do what you're doing. But if you're struggling and you're trying to find different paths to success, I'm saying headline trading is not as bad as every technical trader out there would like you to believe.
All right, I want to bring on Peter Tuchman now, the Einstein of Wall Street, live from the West Side Highway, I think.
I'm going to do my best. I'm going to do my best, Spencer. How you doing?
Peter, the market opens in 28 minutes, man. What are you doing?
Dude, I am running through. I'm riding down the highway with cops all around me. Craziness here, trying to get to the market. How's everything going?
I mean, we're in a fast market here. The market is we're not making new highs of the day across the board in the S&P, the Nasdaq, the Russell, Dow futures. Oil just took a bath on a headline that we could reach a deal with Iran, thereby weaning ourselves off of the Russian oil. So net positive in some ways, negative in other ways, but it's probably a net positive here. So I would just like your thoughts, Peter. I mean, we had a broad-based rally yesterday. What'd you make of that?
I think the rally yesterday was completely off of Jay Powell's comments about taking anxiety off the table about what we were looking at as far as interest rate raises, right? He kind of threw out he tickled everyone with a 25 basis point prediction for next week or whenever it is, mid-March. And I think that and then he said basically his decision-making was going to be, once again, as always is, data-based. They're going to keep their eyes on the war and not do things that are going to jeopardize the economy around all the indecision about what's happening in Ukraine and Russia. And I think that was, we've disengaged the story of war. Once the bombs start to fall, market tends to disengage it. So I think the anxiety around the market and the sell-off over the last couple of days we're 6-7 days into this war, and I don't mean to sound non-empathetic, because my prayers and love go out to everybody over there. But as far as talking about the market, I think the market was engaging fear about what was going to happen interest rate wise once the war actually started. And I think yesterday Jay Powell took that anxiety off the table and said we're going to actually actively watch the situation and make our decisions about interest rates relative to what's happening in Ukraine.
So, he'll be speaking again today, of course, to the Senate. And of course, he's only one voice in the room at the FOMC, but his voice carries weight. So the clarity that, we're going to raise rates in March, and we're going to do it at a quarter point, right, is I think what you're referring to. So where do we go from here now? I guess, like, what's the next catalyst? What's the next I don't know. What's the next?
There's so many moving parts. Can you hear me?
Yeah, I hear you.
There are just a lot of moving parts. For me to be able to answer your question responsibly, I would have to say I'm not sure. We don't know. Look, that's quite a story with Iran. Obviously oil is a big situation. Yeah. Whether we release some of our own reserves, or whether Saudis come in, or deal with Iran, that's extraordinary. I think that's going to, the market's going to have to digest that. As Dennis was talking about headline trading, I love that little comment I heard at the end. Headline trading is fascinating. I don't always go along with it. I'd rather be a contrarian to it, because the algos tend to run things up with irresponsibly. But I think we're going to see the interest. We're going to see the Fed. We're going to see the war. We're going to see some earnings. We're going to see some oil. I think these are the moving parts we need to keep our attention. Right now, all I'm doing is paying attention. The market is fascinating. When you're down 800 one day, we rally back intraday. When you're down 600 one day and up 700 the next day, how could I make a prediction what it could be, Spencer? It could be either way, all day, same day, every day.
Yeah, I understand that. All right, Peter, I want you to get to the New York Stock Exchange safely, please. Although I see you stopped driving, so you must have hit a red light, which is good. I
hit better a red light than a car.
Yeah, that's certainly true. All right, Peter, please get to work on time, and thanks for coming on today.
I really appreciate it. I'm glad I was able to connect with you. Thanks, Spencer.
All right. Holy cow! Please don't stream and drive. Don't trade and drive. Don't do any of that stuff. Also, like, come on, that whoever made that comment in the chat, SNR. I was referring to the fact that the U.S. and Iran aren't exactly friends. Okay, and that's not a secret. I'm not the most knowledgeable, and even I know that. Okay, they've threatened us with nukes before. That's what I was referring to. So, come on, man. Get out of here with that stuff. All right, there's a lot we did not cover on the show today. A lot of earnings I would have liked to talk about. A lot of software names. AI, we didn't talk about Box. We didn't talk about, let me pull up my list here. We didn't talk about BJ's or Burlington or Big Lots or Kroger or Okta or ChargePoint or Splunk or any of that stuff. They're going to cover all that and more on Live Trading with Benzinga coming up right now. So this stream will redirect you to that. Thanks to our guest today. Thanks to Peter. Thanks to Mark. Thanks to all of you in the chat, even the people that are calling me racist. That's fine. Whatever. And we're done. All right. So please remember, all the information from our show meant to be used as informational purposes, not for investing or trading advice. And I'll catch you guys later on Benzinga Live. Stay tuned for Live Trading with Benzinga. Check out Benzinga Pro. You know what? Let's end the show today with an actual commercial for Benzinga Pro.
Did you know nearly all stock price changes of 10% or more result from a single news headline? That's right. News headlines have a unique ability to drive stock prices up or down. These news catalysts create trading opportunities every day. All you need is a little help to reach out and take them. And if you're looking to grow your portfolio, it doesn't matter if your investment budget is small or big. An easy-to-read stream of news headlines will increase your opportunities to profit from price changes in the stock market, consolidate a knowledge-based investment strategy, and grow your portfolio. All you need is Benzinga Pro and its powerful news alerts, price tracking, and portfolio monitoring to make a positive change in your trading performance. We've already helped thousands of retail traders across the world, and they could not be happier. increase your market knowledge, boost your exposure to big movers, and make informed trades before major price changes. The opportunities are all around you. Subscribe now, and we'll skyrocket your portfolio today.